Er gilt als Wall-Street-Legende, als ein Ausnahmetrader, ein Spezialist für Rohstoffe. Und er hat natürlich auch einen Spitznamen, Trader Vic. Herzlich willkommen zu Jünemanns Börse, dem Finanztalk, meine Damen und Herren. Und ihn begrüße ich heute in meiner Sendung Sperandeo, Vorstandschef von Enhanced Alpha Management, wie seine Firma heißt. Und er hat sogar einen neuen Indikator mitgebracht, den TVI, Trader Vic Index. Hi Vic, there is an old trader's rule, never fight the Fed. And the Fed is really about to pump in more money into the system. Quantitative easing number 2 is called. How will that work? Will that mean a good time for stocks?
Well, it's already meant, and it was anticipated, all right? And this word got out in the end of August when Ben Bernanke, chairman of the U.S. Fed, spoke about this subject at Jackson Hole, where economists meet to talk about the world. And at the beginning of September, you'll notice a gap in the charts, and the market went straight up 8.5%, biggest September move since 1939. So obviously a lot of the anticipation is well known. And usually when something is well known, when they announce it, most traders would sell on the news. So I wouldn't anticipate it continuing. There's also an election the day after they're going to make this announcement, the day before they're going to make the announcement, and that's going to have some impact. Although the Republicans will win, the question is how big do they win?
Yeah. So you as a trader are preparing yourself maybe for the markets to come back again after this push upwards. I mean, there are definitely some risks. You spoke about the midterm elections. We have a jobless recovery. Do you think that is a risk that the market will take into account?
It's a continuous risk, and it will occur. There will not be any jobs created of any consequence in the U.S. with the current administration's policies, which are, although they deny it, it's very anti-business. You've raised the costs of American labor to such a degree that virtually all manufacturing jobs, not 100%, but 90%, are going offshore. And that this problem of a jobless recovery is going to continue. You've raised cost in FinReg, the recent regulation, healthcare. There's a threat to raising taxes, which is an unknown factor. All of these things inhibit businesses from starting new businesses, hiring people, and they're going to wait and see. So it is a jobless recovery. I would say, just to pinpoint a little bit about the Fed's anticipated quantitative easing, that it will work to a very small degree the way they're going to do it. So that's not going to have a big impact either.
But on the other hand, we have development in the currency field that the dollar is getting weaker and weaker, which the American government really wants to do it, to have it, to push up exports maybe.
True.
And there is a danger of sort of currency war. Do you see that?
Yes. As much as the U.S. Treasury Secretary claims to deny it, its policies, all the policies point to wanting the dollar to decline, to develop greater exports. So that could develop into a currency war, although they don't say that to the public as such. But it could develop, especially with the U.S. being a world reserve currency and pushing down the currency through their policies. You certainly could get action by other countries trying to stop that declining dollar.
Maybe the Chinese are interesting to stop that, because their investment in the US to finance the huge deficit is getting less worth, and so they are probably not happy. Do you think China itself is a risk, that the economy there is cooling down too much? Is that another risk we have to take into account?
Absolutely, and they've already shown that they're willing to raise interest rates to a small degree, but they all central banks usually work in small steps. It would be very unusual for China to try to slow down its inflation, especially in real estate, with only a quarter of a point boost. So right now, they want to slow their economy down to a degree. So that is a risk to the world at large, and it is a risk also to commodities.
Commodity is a very important subject for you. Do you think that in many fields commodities are still going up, that there will be much pressure on commodities price-wise in the next future?
Well, to some commodities, there will be pressure, all right? There will be pressure on things such as copper, which China is a big buyer of copper, and energy. They're a big buyer of energy. But there are certain products they're not necessarily going to influence. Cotton and sugar, coffee to a degree, gold and silver, very limited. There will be influences on some commodities, but not everything. So it's a mixed bag.
So if you take the whole picture now, what do you think the markets will go from here? I mean, if I understand you right, you think it could go down again after this push-up because of quantitative easing. Do you think by the end of the year the Dow and the S&P will be lower than now?
Okay. The answer is I believe that whatever happens on November the 3rd, both the election and the quantitative easing have been discounted. So you'll see somewhat of a sell-off after that. And then there's the one remaining issue in the U.S., which is this tax issue, whether the Bush tax cuts will be extended, partially extended, or they'll not be extended. And that is a huge issue. To me, a very important issue. So I would like to, let's say, make a prediction longer term once you know the facts of the election, again, the extent of the Republican victory, and what they're going to do on the tax issue. Then you can make a more intelligent prediction into the future. But up till then, whatever happens on November the 3rd, the market sells off because it's already discounted all the news that you're going to see.
So if you then look at the different asset classes, what would you then think it's worth betting on? I mean, after you have more knowledge what's going on with the tax business.
Well, right now, the asset classes are all pretty much correlated because quantitative easing didn't hurt bonds, didn't help them as much as they should. Okay, helped them a little and then they sold off. Stocks rallied, commodities rallied. So they're all correlated. So actually, as a whole unit, everything traded on the same news. So therefore, in the short run, and this is pretty short run, they'll sell off for a couple of weeks before you get the news on what they're going to do on taxes.
So general idea is now it's probably more cleverer to be short than to be long. I mean, you have to be flexible as a trader anyway, but I understand you that you say probably you can make more money being short.
In the short run, for a very limited period of time, that's the way to bet, okay? So, and again, I'm not saying in a big way. It's just that when everybody knows something, it's fully discounted. I mean, 8.5% move in stocks in 1 month, plus a little, there's profits that are going to be taken.
So let's take a long-term view and let's come to your indicator, the DTI, Diversified Trends Indicator, a sort of trading indicator with managed futures, one of your products. And the last 2 years it didn't work well. Why? What's wrong? I mean, well, it's sort of mechanical, or a mathematical system which sometimes doesn't work in certain times?
Okay, nothing works 100% of the time. So you have to take into account, well, what environments do each asset class work well in? Stocks, they work well in a high growth, low inflation environment, okay? Gold does not do well in a low inflation, high growth environment, like 82 to 99. Gold compounded at 0.25% in that period. Bonds do well in recessionary periods, 2001, for example, And even in 2008, bonds did very well. Recession, depressionary environments. The long-short commodity strategies, which is what the TVI is, and the former one, the DTI, same indices with different twists, they do well in high inflationary environments, in growth environments, or in depressionary environments. They do not do well in stable environments. One last point, Bernie. The oil, if you use that as a proxy, kind of the leader of commodities, in June of 2009, oil was $77. The future price today in the December future was 80, and oil's 80.
Yeah.
So it hasn't moved. It's been stable, and that's when these things don't work.
Let's look at your new indicator. We have a historic performance here on a diagram. I mean, that's quite impressive. We have the MSCI World, we have the S&P, we have the bonds, and then we have the TVI, the Trader Vic index. And is that foolproof?
No. It's the same principle as I've said. In an inflationary environment, this strategy should do extremely well. It'll outperform all other asset classes. It should. In a certain environment like we've just seen, it will perform not horribly. It will perform, let's say, less robustly than bonds and or stocks.
Do you think that we get into an strong inflation environment with quantitative even in other measures by the Fed? I'd just like to mention that this sort of index is already put into a UCITS 3 funds here in Germany, and it can be also bought up. So do you think there is inflation to be coming soon?
Well, as you would say, Bernie, don't fight the Fed. And the Fed wants inflation in the U.S., and even the actions of the EU by spending €1 trillion, €1 trillion, by bailing out Greece and among other countries. The next cycle is without a doubt an inflationary cycle, more or less. But you're going to go from a depressionary cycle to an inflationary cycle. And so it's just a question now of timing. When you time it is a different issue. But it's coming, so you should have a diversified portfolio, probably less bonds, because bonds have already done extremely well, and probably more commodities. That would be my logical suggestion.
Thank you very much indeed.
You're welcome.
Ja, meine Damen und Herren, das war sozusagen der Rat von Trader Vic. Wir kommen in eine Phase früher oder später der Inflation, und das heißt also Bonds untergewichten und Rohstoffe übergewichten, so sein Rat. Wie immer können Sie diese Sendung auch im Internet verfolgen unter drf.fm. Das war's, vielen Dank fürs Zuschauen und auf Wiedersehen bis zum nächsten Mal.